The Union Minister for Finance and Corporate Affairs, Srimati Nirmala Sitharaman, presented the Economic Survey 2021-22 in Parliament today. Economic Survey gives an overview of the economy's performance on various parameters during the current financial year and outlook for the coming year. In the Economic Survey, Indian economy is estimated to grow by 9.2% in 2021-22 as per first advanced estimates, subsequent to a contraction of 7.3% in 2020-21. GDP is projected to grow by 8 to 8.5% in real terms in 2022-23. The year ahead is poised for a pickup in private sector investment, with the financial system in good position to provide support for economy's revival. As per IMF's latest World Economic Outlook projections, India's real GDP projected to grow at 9% in 2021-22 and at 9% in 2022-23 also, and 7.1% in 2023-24. which would make India the fastest growing major economy in the world for all 3 years. Agriculture and allied sectors are expected to grow by 3.9%, industry by 11.8%, and services sector by 8.2% in 2021-22. On demand side, consumption is estimated to grow by 7%, gross fixed capital formation by 15%, exports by 16.5%, and imports by 29.4% in 2021-22. Macroeconomic stability indicators suggest that the Indian economy is well placed to take on the challenges of 2022-23. Combination of high foreign exchange reserves, sustained foreign direct investment, and rising export earnings will provide adequate buffer against possible global liquidity tapering in 2022-23. Economic impact of second wave was much smaller than that during the full lockdown phase in 2020-21, though health impact was more severe. Government's flexible and multi-layered response is partly based on an agile framework that uses feedback loops and the use of 80 high-frequency indicators in an environment of extreme uncertainty. Talking of fiscal situation, the revenue receipts from the central government April to November 2021 have gone up by 67.2% year-on-year as against an expected growth of 9.6% in the 2021-22 budget estimates. Gross tax revenue registers a growth of over 50% during April to November 2021 in year-on-year terms. This performance is strong compared to pre-pandemic levels of 2029-20 also. During April to November 2021, CAPEX has grown by 13.5% year-on-year with focus on infrastructure-intensive sectors. Sustained revenue collection and a targeted expenditure policy has contained the fiscal deficit for April to November 2021 at 46.2% of budgeted expenditure. India's merchandise exports and imports rebounded strongly and surpassed pre-COVID levels during the current financial year. Foreign exchange reserves crossed $600 billion in the first half of 2021-22 and touched $633.6 billion as of December 31, 2021. As of end November 2021, India was the fourth largest forex reserves holder in the world after China, Japan, and Switzerland. Talking of monetary management and financial intermediation, the liquidity in the system remained in surplus. Repo rate was maintained by the RBI at 4% in 2021-22. RBI undertook various measures such as GSEC acquisition program and special long-term repo operations to provide further liquidity. Year-on-year bank credit growth accelerated gradually in 2021-22 from 5.3% in April 2021 to 9.2% as on 31st December 2021. It was an exceptional year for the capital markets too. Rupees 89,066 crore was raised via 75 initial public offering IPO issues in April to November 2021, which is much higher than in any year in the last decade. Sensex and Nifty scaled up to touch peak at 61,766 and 18,477 on October 18, 2021. Among major emerging market economies, Indian markets outperformed peers in April to December 2021. Talking of inflation, the average headline CPI combined inflation moderated to 5.2% in 2021-22 April to December from 6.6% in the corresponding period of 2020-21. Effective supply-side management kept prices of most essential commodities under control during the year. Proactive measures were taken to contain the price rise in pulses and edible oils. Reduction in central excise and subsequent cuts in value-added tax by most states helped ease petrol and diesel prices. Talking of sustainable development and climate change, apart from continuous efforts for sustainable development and climate change, at the COP26 in Glasgow in November 2021, the Prime Minister announced ambitious targets to be achieved by 2030 to enable further reduction in emissions. The need to start the one-word movement, lifestyle for environment, urging mindful and deliberate utilization instead of mindless and destructive consumption was underlined. The agriculture sector experienced buoyant growth in the past 2 years, registering a growth of 3.6% in 2020-21 and 3.9% in 2021-22. Minimum support price policy is being used to promote crop diversification. Allied sectors, including animal husbandry, dairying, and fisheries, are steadily emerging to be high-growth sectors and major drivers of overall growth in agriculture sector. Government facilitates food processing through various measures of infrastructure development, subsidized transportation, and support for formalization of micro-food enterprises. Capital expenditure for the Indian Railways has increased 5 times in comparison to the 2014 level. Extent of road construction per day increased substantially in 2020-21 to 36.5 kilometers per day from 28 kilometers per day in 2019-20, a rise of 30.4%. Net profit to sales ratio of large corporates reached an all-time high of 10.6% in July to September quarter of 2021-22, despite the pandemic. Introduction of production-linked incentive schemes, major boost provided to infrastructure, both physical as well as digital, along with measures to reduce transaction costs and improve ease of doing business, which would support the pace of recovery. Talking of services sector, gross value added of services crossed pre-pandemic level in July to September quarter of 2021-22. However, GVA of contact-intensive sectors like trade, transport, etc. still remain below pre-pandemic level. Overall, service sector GVA is expected to grow by 8.2% in 2021-22. During the first half of 2021-22, service sector received over $16.7 billion FDI, accounting for almost 54% of total FDI inflows into India. India has become the third largest startup ecosystem in the world after US and China. Number of new recognized startups increased to over 14,000 in 2021-22 from 733 in 2016-17. 44 Indian startups have achieved unicorn status in 2021, taking overall tally of unicorns to 83, most of which are in services sector. 157.94 crore doses of COVID-19 vaccines were administered as on 16th January 2022. 91.39 crore first doses and 66.05 crore second doses. With revival of economy, employment indicators bounced back to pre-pandemic levels during last quarter of 2020-21. As per the quarterly periodic labour force survey data up to March 2021, employment in urban sector affected by the pandemic has recovered almost to the pre-pandemic level. According to Employees Provident Fund Organization data, formalization of jobs continued during second COVID wave. Adverse impact of COVID on formalization of jobs was much lower than during the first COVID wave. Expenditure on social services, health, education and others by centre and states as a proportion of GDP increased from 6.2% in 2014-15 to 8.6% in 2021-22.